Okay, folks, welcome to Market Wrap for the 26th. What we're going to talk about tonight are the closing charts of the major averages. We'll talk about the earnings out of Microsoft, AMD, and Alphabet. Then we're going to talk about the profits that we took on our Facebook trade. We did an earnings trade on Facebook last night. I posted a video about that trade on YouTube last night. It's there for you to view. As a matter of fact, I'll post to it at the end of this video. And we did a short trade of Tesla today. Yes, short. And I'll do a walkthrough on that trade. I'll give you the whys behind that trade. So then we're going to segue over and into, with members, a discussion of our positions. And we're going to talk about our strategy for adding new trades. We'll talk a little bit about our potential earnings trade tomorrow night of Twilio. Later on in the week, Amazon. And we did begin to buy back today, DWCA. We were triggered right at the close, and we plan on adding more to that position. I do believe that we are going to go lower. Members will talk about that later on in the strategy session, so stay tuned. Okay, let's get to it. Let's first go to earnings out of AMD. And looking at the price action, they had decent earnings. Looking at the price action, I could tell why I couldn't get my fill on my Strangle Trade, because there's just simply no volatility. I would have made money probably tomorrow morning, but you need to get paid, right? There's no guarantee that simply because there's light volatility on the options before earnings that you're going to get light volatility after earnings. So in short, we didn't get our fill on the minimum premium that we needed to get paid to put this risk on. So therefore, we walked away from the trade. Moving on to Google. Google is down in the after hours. We were down considerably lower. And it looks as though inflation is beginning to eat into their business. I'm looking to see here if the Apple iOS issue is going to be a Google issue, as well as what we saw out of Snapchat and out of Facebook. I'm not seeing it here, but that doesn't mean that it's not going to be an issue. So more to come on that in the future. Let's take a look at Microsoft. They were up at last look. Oh, look at this. Big reversal. Now they've given back all those gains, and they are reversing. Folks, Microsoft is a short to me. I've been wanting to short it for quite some time. We've shorted it here and there, but we've hedged it using a vertical spread. But I never got big with it. We just booked our profits and moved to the sidelines because the market simply wasn't buckling. And Microsoft is the market, along with Apple and the other major names. So no sense fighting it. Now, we'll be talking about some short positions that we have on in a moment. And I was very tempted to stop out. And given today's price action on the small caps anyway, that was a no-go. So let's get to it. Let's talk about the trades that we closed out today. The first one up is Facebook. We opened this one up last night, Monday night. And again, I did a video on this one. I'll link to it at the end of this video. And I walked you through how we set up our Strangle Trade. For those not familiar, a Strangle Trade is when you sell, not buy, sell a deep out of the money call option and a simultaneous sale of a deep out of the money put option. We take advantage of expensive options and we expect IV crush. What does that mean? That means implied volatility crush the following day. And that's exactly what happened. We booked a 78% profit on this trade. We closed it out very early on. And we went into the day with Tesla above 90 on RSI. And to me, that's just screaming short me. Now, Tesla was an earnings trade. We made money on it. Then we got long of the shares after earnings. We booked profits on that trade. I believe it was, yesterday. And today we surged up higher. I put in an advanced order to buy, not to sell, but to buy the 1,225 strike going out to December the 17th, about 52 days left to expiration, because long story short, RSI trading above at the time, 92, 93, was simply unsustainable. And when you take a look at the intraday chart of Tesla, and you know all this going into the trading day, RSI on a 30-minute time frame went above 90. We got our fills, and the shares just began to fall apart. So we made just shy of 7% on that options trade. We did not open up, again, any earnings trades after hours. It was our intent. We simply couldn't get the fills. We need to get paid for that risk. Now let's segue over and into the closing price action of the major averages. And of course, we'll begin, as we always do, with the bond market. And this is the 10-year yield. Bearish bar on the day. However, this is a hammer formation. I'm not convinced we're going to get a new lower low here. Yes, we closed down. Yes, we closed at the lows of the day. Hammer formations usually typically imply that you're probably going to get a reversal. Don't get lured into a false sense of security here. It's certainly not 100%. And I mentioned last night on Market Wrap that we were seeing lower highs and lower lows on RSI. Stokes were rolling over, and that MACD would probably go negative, which it did. So does a pop back mean that we go shooting up to a 1.7 handle on the 10-year yield? No. We need to see whether or not we break out above 16.91 first, because the test is always at the top. Do we put in a lower high, and do we then break down to new lower lows, or do we persevere? Do yields break out and above 1.69 on the 10-year? Because if it does, you may see some weakness in technology. Let's move on. The TLT, 20-year Bond Etf, it broke out today. It recaptured support at 145. Pretty good price action. The problem is volume was very light. Ultimate oscillator looking strong with higher lows. Same deal here on the stochastics. RSI back above 50. Really what it's coming down in the bond market is that we're simply in a trading range. The bond market is being managed. It's being kept in check. And it's been that way for months now. The tips. Treasury inflation protected securities. If you're wondering if the markets are worried at all about inflation, well, look no further than this chart. Because we just hit a new all-time high today after putting in an all-time high yesterday. We just keep going up. Volume, very strong. Ultimate oscillator, rising, higher lows. There's nothing not to, look at money flow. There's nothing not to like about this chart. The dollar, up on the day. This is the dollar bull ETF. Volume was decent. We did fade off the highs of the day. And the dollar being up was the proximate reason of as to why you saw gold and the miners pull back on the day. Members will go over that shortly when we review our positions. The VIX, the volatility index, outside reversal bar today. I mean, yeah, we closed off the lows of the session, but you know, we've been talking about the VIX for a while now. And as I always like to say, when the VIX is low, you got to go. It's one of the reasons why we shorted Tesla today. It was just at ridiculous overbought levels. It was ripe for a short. So the VIX is back up above support. Stokes are now hooking up. So we're beginning to see momentum change with a bias to the downside, then to neutral, now to up. RSI, same deal. Beware, folks. Now, the transports, I also warned about last night. They're very, very extended. I was frankly surprised to see a new daily high today, but we got it. But there was no great shock when we got a reversal off the highs. Yeah, we could still close positive, but to have the Dow transports with RSI at about 80, that's not going to last much longer. We are going to correct on the transports fairly soon, and we'll be looking for shorts to take advantage of that pullback. The S&P 500, filled candlestick. We closed off the highs of the session. You don't want to see that type of price action at all-time highs. Now, I said the same thing back here when we flashed this doji formation on the 22nd. You don't want to see an indecision bar at all-time highs, but this is now the second indecision bar in the past 3 trading days. And Stokes are beginning to roll over. RSI is still rising. The path of least resistance remains up. Volume, though, is a concern. It has been a concern. Yeah, we rose versus yesterday, but this is a concern. The Dow Jones Industrial Average, very similar to the S&P 500, a reversal bar. Volume, though, is strong. MACD histogram losing momentum. The trip Qs, we continue to have a short on the Qs. We haven't added to it in a long time. We still managed to close up a third of a percentage point. We may just close this out if yields continue to pull back and we see move up higher on the Qs. Volume was good today. But remember, think about, let's circle back to Microsoft in the after hours. Here's Microsoft now negative on the session. Now, for those folks that are wondering, why is this guy beating up on Microsoft? Why does Microsoft matter? It matters a lot because you need to know what the largest components of the trip Qs are when you're trading this market. And Microsoft is the largest component of the trip Qs. But that still doesn't answer, why am I beating up on Microsoft? The daily chart looks okay. Volume was good. It's not the daily chart, folks. We always want to pull back and take the macro view of the battlefield. We are in a war. We're trading the stock market. We want to take a look at where we stand on a quarterly view. And here is the bird's eye view of the battlefield. We have RSI in a quarterly time frame of 96, folks. 96. With 80X, the 80X above 80, any number above 65 is considered overbought. Above 80s is bananas. We were at what back in 2000? 89.21. So this is the reason why. This is the key reason as to why we keep watching Microsoft as a potential short. And if Microsoft goes, in all probability, so goes the triple Qs. Now, the small caps. We have been very stubborn with this position. We've been short of the small caps since March. We've had pullbacks. We've had rallies. We've had breakouts. We've had breakdowns. It's been crazy. Now, yesterday, we broke out yet again for, I don't know, the fifth time above this resistance level. And seasonality very much favors the small caps this time of year. So I was ready today to close out the position. The only reason why I didn't do it yesterday was because I wanted to wait and see whether or not the retest of the support level was going to hold. Now, normally I wouldn't do that on this breakout. But the reason why I did is this. We took a look at volume. Volume to the upside, and to be fair to the downside, has been pretty anemic of late, especially to the upside. So the probabilities of this breakout continuing on a daily time frame on the small caps is less likely to be successful versus a breakout on rising up volume, because that would imply that you have institutional demand. We don't have that. What happened today? We broke down again. This is a bull trap, a breakout point failure. Does that mean that the IWM, the small caps, are broken? No, but it certainly allows me to live to play another day to the short side. I would not go adding to the short side, though, here. So please don't do that. The banks, daily chart. Second consecutive day worth of topping action. You need to watch bond yields. I suspect that we're going to pop up higher tomorrow, so you may get a continuation breakout on the banks. Volume has been very light. Technology, daily chart, a reversal bar. We did close up over a quarter percentage point, but we did fade off the highs of the session. Not the best of price action. RSI still looks good. Stokes, a bit mad. They're rolling over, but they're not broken. You can't trade off of them yet. Volume, very light. Yes, we rose above yesterday's volume, but still well below the moving average. That is no bueno. So frankly, in short, this whole market has me suspect Not to mention, it's very, very expensive. Consumer discretionaries, daily chart, they rallied, they reversed. They still closed up, barely, but this is a sign of a top here. And today you had consumer confidence, which came out very, very good. Look at the volume today. Very strong volume, but a lot of it was selling. This may be a short-term top on consumer discretionaries. They sold the news. Energy continued higher today by over a half percentage point. Stokes still look good. RSI, potential lower high. You don't want to see that as you're putting in new price highs. Volume, very light. Emerging markets, daily chart, dollar up. Emerging markets down, as is typical. In fact, we had an outside reversal bar, so avoid right now. Let's wait for that dollar to crack. I think we're a lot closer to the dollar cracking than people might expect. Now, members, we're going to segue over into our strategy session regarding our positions. Will we add, sell, hold? And we'll talk a bit about some watch trades that we have, in particular, earnings trades. And if you're not currently a member, please take advantage of our 14-day free trial offer. If you're watching this on YouTube, use the link below. If you're not ready yet, I completely understand. Please take advantage of our free commentary that we put out and just subscribe to my YouTube channel. Give us a like if you would. And in fact, I have a 5-part video tutorial, which is free to you, sharing with you my top 5 favorite candlestick patterns. Use that link below. If you're watching this on YouTube, you can also find that link on the website. And if you watch this on Twitter, use Linktree above. Members, let's head on over and talk about our positions and our watch stocks. One chart I forgot to go over earlier was gold. Was down today. We gave up that 1,800 mark. I knew we weren't going to spend much time there. We retested 7.